Hello, and thank you for joining me in another video. If you're new here, my name's Howard. I've been a retail investor for over 10 years now, and this channel is about me sharing my investing research and then what I'm actively buying. And today we're going to be talking about Zeta Global. Now, this is a stock that come on my radar recently. It's getting more and more talk online. So I've been doing my research, and given that the stock price, like all stocks, have taken a big cut recently, I have actually initiated a small position in that. It's only a small position, a starter position. But what I thought would be useful to go through now is kind of my thoughts around the stock, the research that I've done behind the stock. We're going to go through what the company does. I've actually worked in marketing myself for over 10 years now, running the ads for businesses. So I do know quite a bit about the marketing business, which Zeta Global is in. We're going to do an overview about the company. We're going to start off with some of the concerns, or what my concerns are about the company. And then we're going to go into the positives and ultimately why I decided to start investing in this business. So first of all, we're going to jump over. Well, we're going to first of all start about what Zeta is. So Zeta is a marketing cloud. So to put it in a very simplistic term, when you're marketing for a business, you have lots of different marketing channels that will go into that business. Think Google ads and Facebook ads, but then we'll also have stuff like email. We might even be doing mail send outs, TikTok ads, all different things like that, organic, maybe TV. And basically what that produces is, number one, spend. All of these things cost money. And then number two, what we get in return for that spend, which is ultimately sales. So that's that ROI we get. And the way we make marketing decisions is ultimately how much we spend and how much we get in. But there's so much stuff in between that. We've got like views, impressions, the amount of time people come back, how these different things are interacting with each other. Are people clicking on a Google ad when they're first researching, and then we're retargeting them and getting in with Meta? Maybe they touched both of those points and then they were in an email flow and they sent 3 emails, and that's when they finally clicked and decided to book a call. There is so much that goes into the web of marketing that a person goes through before they decide to purchase something. And Zeta is a cloud predominantly for larger businesses that basically puts all of that data into one place. And the idea of clouds like this is you control all of your marketing from the cloud, and then it can also give you good data based on all of the areas that you've been in. So marketing clouds or marketing tools like this are not new. But what is more interesting about Zeta is, number one, its growth. And number two, it seems to have rebuilt itself about being data first, owning its own proprietary data around what customers do. And that really, really interests me, which is what we're going to go into now. So hope that's given you an overview of what Zeta does. But what kind of more interested me more about this is build a complete, well, we talk about what their product does here. And it's these areas here, like build a complete picture of every individual using Zeta's proprietary identity graph. It links first-party data, so that is the data that you as the company have, with Zeta's identity graph of 245 plus million US consumers. So why this is exciting to me is that having the behavior and the identities of consumers and then using AI to model this is super, super powerful. And that is actually what has fueled Meta's growth over the past few years. If you look at Meta's earnings, they've been fantastic. They've increased the amount of profit they're making, and they're actually making more money per user in terms of the ads that they're showing them. And the reason they're doing this is because Meta's targeting is now completely AI based. So what not a lot of people don't realize is that when you run Facebook ads now, it's not like a few years ago where you used to target on demographics. Say I want to sell a pair of yoga pants. I would target this female demographic who is interested in yoga studios, who might be interested in these particular influencers. That is not done anymore. You simply pretty much just upload your creative and Meta will find the person that is looking for yoga pants. And that is also why I'm sure you'll notice that your Instagram organic feed is so much more personalized. There is more stuff that you want to share to your personal friends, and it keeps you sucked in for much longer. The targeting is done by AI now, and that's because Meta has so much data on you and all of the other people that use their apps that it can just use AI to target you much, much better. What interests me with Zeta is that if I watched an interview by the founder of this, they did actually kind of decide to go down this map years ago. They remade their cloud, not just to be someone that can control their own data, but actually start logging all of the customer data from all of their customers, build that as proprietary data, which they can then use to actually help other companies grow in the future. So what does interest me about this is Zeta is managing all of these other businesses. It is tracking all of these identities and all the purchase behaviors. That is Zeta's own proprietary information, which they can then use to essentially sell to customers by improving their marketing with that. So by providing a new audience of people and an intelligent AI-powered audience of people, it could, in theory, or it should make people's marketing a lot better, which makes this product a lot better for the companies that are using it. So that's an overview of the company and why I'm kind of interested in it, because these marketing clouds and marketing tools have existed for a long time. A lot of the time they can be sticky, but you kind of end up dropping or going on to another one. So what we're going to go into now is, okay, we've got an overview of the business. Some of my concerns about the business, or not so much concerns, but why I haven't immediately jumped on this and why I'm just starting with a starter position. And number one is it's a marketing company, and their marketing is very good, and it's actually a bit too marketing and sales based at the moment. So to give you an example of this, it kind of, where they're talking about their new Athena, which is their AI marketing assistant. The way this is marketed is marketing super intelligence that can help your business. It's named after a Greek god, which is very, very stereotypical in the startup business, naming it after a Greek god. And it's someone that's supposed to help you every step of the way. It's being marketed as super intelligence. How much of this is just a chat bot that they've integrated into their software, which lots of other companies do already? I use marketing platforms which have a chat bot. Many pieces of software have this now. It enables you to talk to your data. Shopify, for example, has their Sidekick, which enables you, and it is very useful to go in and speak actually to your Shopify store effectively, give unique, pinpoint unique areas and statistics and improvement areas of your particular business. Zeta can do that, clearly. How much of this is a super intelligence that is going to be at the forefront of AI in marketing, and how much of this is just a chatbot that's built in so you can talk to your data? I'm not too sure about that, but we'll get on to kind of what I'm thinking about that and why I invested in the future. Secondly, talking to that, a positive and kind of something I am to and froing about is the founder. So the founder, David Steinberg, he's very good to listen to. He's obviously an extremely accomplished entrepreneur. He's had a business before, and he's also started this business from scratch. And in this interview that I watched with Dan Ives, he talks about reinventing the company to go this new data first route and kind of rebuilding everything and basically ditching profitability in order to invest in the engineers to build their platform now. And this, while it was good to learn about the story, kind of this with Athena in the background, with Dan Ives, who's the balls of balls, this was, I get the feeling this was sales rather than really, really deep, rich technology and product that I could get interested in. Every business has two parts. It has innovation and it has sales, both of which are extremely important. I tend to invest, and I've had the most success when I invest in people deep in product. Shopify, Toby Lutke, Elon Musk with Tesla, Peter Beck with Rocket Lab. These are all founders that are deeply obsessed and fanatic and nerdy about the product and the engineering and building. And then the product kind of sells itself. Of course, you need your marketing on top, but the product kind of sells itself because it's so fantastic. That's what happened to all those companies. David Steinberg is a marketing person. He's a salesperson. He's fantastic at doing that. And when you're talking about B2B enterprise software, you need sales. Palantir has fantastic sales, for example. You need to be able to get these big deals on board. So a lot of it is sales, but what it does kind of make me have a bit more caution about, okay, we can talk about how fantastic Athena is and Zeta and the plan in the long run. I want to make sure that the actual quality of the product is really there behind. When people are signing up, people are finding this product absolutely fantastic. They're not regretting signing up for a couple of years and now they're stuck. They're finding this product fantastic, is improving their businesses, and they need to extend their contracts. So not necessarily a negative, but it's just something I'm thinking about when I'm looking at this. This is a sales company, a marketing company. How much of this talk is talk and how much of it is actually real results they're going to get? So more of a concern, but now we'll get on to the more important stuff. And And that is the numbers. Numbers will matter. It doesn't matter how much my concern is. These are subjective things. What is objective is the numbers, how much money they're bringing in. And if we look at the last quarters, we can see that they're growing very, very nicely. With marketing, this is a very lumpy business. Q4 is much, much bigger because that's when everyone's buying stuff. So we did have a big Q4, and this smoothed out. We can still see that Q3 this year still beat Q4 last year, and they're guiding to beat Q4 comfortably this year as well. So they're growing in all of the right directions. And if we look at this annually as well, you can see huge, huge growth. So from kind of 300 million all the way up to just over 1 billion. And if we annualize the results, we're going to be comfortably over 1 billion for 2026 when we annualize Q4. And what is also interesting, which I think is particularly important in this market in 2026, only the true winners are going to get rewarded. There is no free capital going around for mediocre investments. What they're showing good growth, and they're also showing that they're about to move into profitability. Well, in Q4 they were profitable. We can see here their net income, and that's expected to be profitable in Q4 as well, I believe. So they're actually turning into profitability. They're growing at kind of, I think 20-something% per year is their predicted. So that's all moving in the right direction. So when it actually comes to, is this product working for customers? This would suggest, yes, it is working for customers because the existing customers have to be staying on and then new customers are being closed. That's how we increase our revenue. So that is what is looking really, really positive to me. Then we're going to go back into, we don't have the Q4 results yet. They come out in a week or two. We're going to go back and look at their Q3 presentation because that can give us a good look at the financials of the business. So they have been beating expectations and growing consistently now, 15 straight quarters of over 20% revenue growth and 19 consecutive quarters of expanding their adjusted EBITDA margin. So they're making more money and they're expanding their margins. So they're making more money on that revenue they're bringing in as well. So 26% year-on-year growth from the last quarter to the previous year on revenue, and the EBITDA 46% growth. So they're growing revenue and they're growing profit. You can see here as well, if we look at scaled customer expansion, they are growing quarter over quarter. I can't remember what they called it, but the 100K to a million, they did actually drop slightly last quarter, but overall their million plus customers grew enough that they kind of expand on that. So this is how we kind of look at these customers as well and how much money they're spending. The good advantage of this product is that it's working with very big enterprises. The contracts can get really big and you can sell people up to larger packages as well. What was the next one I wanted to go through as well? Powerful leverage. So again, this is kind of how people have been growing. What is most interesting is people spending over $1 million. These people have been gradually increasing, like consistently increasing, which is good. And again, longer customers stay with us, the bigger they become. This is really important for me because when I've used marketing clouds before or marketing software, they're a bit fun to start off with, but ultimately when you have to go and look at the budgets and you have to look at where your money's going, you can make the decision that is it worth spending on this software? And a lot of times it gets cut and you're not that much worse off just building your own, doing your own reporting. The fact that people staying with them and extending is really, really good. It shows that this platform is actually very, very useful to the businesses. And when it comes to their yearly doing the budgets, they want to extend and increase. Then we'll move into Zeta 2028. So this is basically their projections they're doing over the next few years. They are predicting 20% compounded annual growth rate for the next 3 years, up to 2028. They're predicting 25% 25% margin. So they want EBITDA growth up to 525 million, which will be 25% compounded annual growth rate, I think, or 25% margin, sorry. That's what they're aiming to get to 2028, and free cash flow up to 340 million in 2028. So expected in free cash flow expected in 2026 is 209. They're going to expecting to grow that consistently over time. What this does mean, if we take 340 million, we can put some price to sales on that, maybe a 20 price to, or sorry, not price to sales, but a price to free cash flow. If we're looking at a price to free cash flow of 20, that easily gets us to just under a 7 billion market cap, and you could increase that depending on how quickly they're growing. So it gives a good idea of how to model what this company could be worth, as long as they're sticking to this. Then we'll go through to guidance. So they've been doing really well on kind of beating their guidance. They're always kind of hitting and beating their guidance. In terms of what they're predicting for the financial year of 25, they're predicting 27% year-on-year growth, and they're predicting 15 to 16% year-on-year growth for the Q4. So this quarter is predicted, the Q4 that's just gone, sorry, is predicted to be the best one they've ever had. Adjusted EBITDA of around 90 million. And adjusted revenue, and revenue of kind of 360 million. Consistent growth, which is what we want to see. And then from their guidance, they're still hoping to hit 20% year on year. So to give a summary of where we are with Zeta, the business is growing in the right direction. It's growing revenue, it's growing margins, it's just turned profitable, which is a very good time to be profitable when people are getting a lot more skeptical and worried about investing in software at the moment. If they can carry on delivering this growth, and if they can really show themselves as being an AI leader in marketing, we might even be beating those targets as well. It does seem to be a product that if it is sticky and people are using it and benefiting from it, people are going to use it more. They're going to spend more within this product, and then more customers are going to flow to it. Because if you do find something like this, like we know of enterprise software that is really sticky, the revenue and the profits can go very quick because you have a lot of leverage on your pricing. So lastly, we'll finish off, we'll go into the stock price, because of course, stock price really does matter when you're valuing a company. And the reason why I've entered recently is because of what has happened to the stock price in software. If you look at the last month, Zeta is down 36%, year to date down 24%. And why is Zeta down that much? Well, it's down because of nothing that it's done itself, but just because software has been hit. It has been taken to the woodshed this year. And so when you see a stock has been dropped, has been cut 30% in a month, 36% in a month, when it hasn't done anything different, that signals when it might be an opportunity. We're at a 3.6 billion market cap. If we go back to here, there we go. We're at 3.6 billion market cap. We're looking at a guidance of 1.27 billion for 2025. That means that we're on a price of sales of about 3, which for software is very, very good. They've also just turned profitable, so we'll be able to have a PE very soon to get a bit of a kind of a more solid valuation on that. And I have started entering. I think I first started buying, I bought my first shares at 17, and I've also got some around 16. I might be adding a little bit more here as well. But if we look over the last year, we can see it really has been taken back to kind of where it was in July 25 before this big run. And all this run has just basically been taken. When we go back to, this is the full 5 year. The lowest it's ever been is at $8. And the amount of execution they've done, obviously we had really good valuations back in 2021. But if you look at the amount this company has executed since 2021, the amount of revenue they put up, the amount of customers they got, the amount of profit they've started making, it does seem like a good time to get in, looking at the price of sales of around 3 as well. So it's not one of my core positions. I've done a small starter position because I am interested in it. I still need to know more about the business. I want to see how this quarter does. But given just looking at the numbers, looking at the current valuation, I thought it was a good time to test the waters. But it's definitely not a company that I'm chucking everything at and getting super, super bullish at the moment. The more research they do on this, the more kind of interviews that I can watch on this, and more ideas about how well their product is doing for their customers. That's going to help me build some conviction over time. So that's my overview of what I think about Zeta, kind of what my overview of the company is, what my concerns are, and also what I think is very exciting about it. I think it's got a founder who has built this company from scratch and done a strategic pivot, which has proved very, very valuable now. We made that years and years ago, and that has been super valuable in how the business is performing now. And I'm excited to see what they do in the future if they can keep this growth up. So I hope this has been useful. If you are a Zeta investor, or if you're thinking about investing in Zeta, please do let me know in the comments. I'd love to know your thoughts on what your history is with the company how long you've been invested, and what your thoughts are and why you did get invested or why you're still thinking about it. So thank you for joining me. Please do hit subscribe if you found this useful. I'll be doing much more videos on Zeta, but then also other companies that I'm always researching and investing in as well. So apart from that, thank you for joining me, and I'll see you on the very next video.